What else do you have to do? You gotta just start investing. Welcome to the $1 Million Challenge. So welcome back, everybody. And I know it's been a minute. I miss you lot, and I know you miss me. I appreciate every single one of you guys. Go ahead and check out my channel. I've been doing stock analysis, just talking about my portfolio and my investments, coming up 3 years now. If you go ahead and support the channel. In today's video, we are going to talk about my dividend and growth investing portfolio. And in particular, we are going to talk about the telecom sector of the portfolio. I'm going to do a little analysis and I'm going to break things down. I am looking to sell out of this sector of the portfolio. I'm done. I'm looking to sell it. And we are going to talk about it in today's video. I've had this sector here. I've had it for as long as I've had the portfolio. You guys can see May 19th, 2020. So that's like 3 years ago. And I haven't seen much growth. It's gone down 24%, no gains. The dividend basically non-existent at this point. In 3 years, it hasn't yielded much. So here are the companies that I have here. You can see I have Verizon, I have Vanguard Communication ETF. So that's the index fund for ETFs. That has done a tiny little bit better, pretty much in the same category. We've had T-Mobile. Now T-Mobile has done really well in the time that I've had in here. It's up 21%. So let's say in 3 years, you just factor out, 6 to 8%. Barely keeping up with the rate of growth in the market. That's what T-Mobile has done. If we talk about AT&T, which AT&T is an aristocrat company. Okay? That is what they do. They are an aristocrat company. Basically are supposed to be part of the dividend kings, and they haven't really done much. These companies haven't really done much, and I'm gonna get rid of it today. And if I just keep on living in here, inflation will eat out the money and it's not going to be earning me any extra money. So I'm going to move this, sell out of telecom, and move it into the monthly income sector of my portfolio. But before we do that, I need to analyze it. So I'm going to show you the reason why. So the first thing we're going to look at is we're going to look at their cash. They have $2.3 billion in cash. They have debt. They owe almost $7 billion. So that put them at a negative $4.75 billion. So right off the bat, they're already starting off at a negative. They owe people money, $4.5 billion. But if you just take a look at just straight looking at the numbers, right off the bat, they're losing right now. So if you look at the other side, their dividend is quite high. 7% is very high. The payout ratio is 50%, so they pay 50% of their income out. And the next time that they're going to pay out, it's August 1st. Let's take a look at the revenue. Okay, this is their revenues, and we can see that it's been pretty much tracking on the uptrend so far. So everything is looking good. That's the total revenue, right? So let's look at the cash, the free cash flow after they pay all the bills and this and that. It's been relatively regular. Because if we look at a revenue here of almost 136.84 billion, okay, that's a lot of money that they're making, and this is annually, by the way. Every quarter they make about 35 to about $40 billion quarterly basis. After we look at that, we look at their cash flow here. They are barely keeping any money that they've made. Last quarter they made about almost 33 billion, and out of that 33 billion, they only saw 1.7 billion into their bottom line. Net income here is about 4.9 billion. Their dividend here, if you look at the dividend, is relatively going up, but I'm getting rid of it because we are seeing stuff like this. So this is their outstanding shares. You can see every single quarter they are basically diluting your stake in the company. They're diluting it every year, just like how inflation dilutes your money. Every year your stake in the company gets diluted every quarter. So that's not a good thing. So let's just take a look at this on a yearly basis. Your stake in the company goes down every year, so that's not a good thing. And then if we also take a look at this here, look at their debt compared to their cash. Their debt is the one in red and then cash is the one in green. Come on, Verizon. Whoa, I understand they have to pay so much. There's 5G. My goodness, they are losing money. So if you look at this here, we see like relatively flat. They've had spikes here, they have spikes here, they have spikes there. But if you average it out, it's relatively flat. It's not going up. They are adding a mountain of debt on top of it. That one goes up for sure. Looking at all those companies, what annoys me is that Verizon, their debt is going up every single time. Their shares outstanding is going up every single time. Their revenue is relatively up. It's like you're making a lot of money from revenues. You're also raising a lot of debt from the shareholders. You also have a mountain of debt as well from like whichever means they get their debt from. So their debt keeps going up. That's number one. Their shares outstanding keeps going up, number two. And then you also have, the good thing is their revenue is going up. So if the revenue is going up, the debt is going up, the shares outstanding is going up, what is going on with free cash flow, right? That is just staying stagnant. I would say maybe what's eating up their money is the dividend, right? They keep on paying very high dividend. They pay a 50% dividend ratio. So I guess that's a good thing for the investors, but you need to have a lot of money to be able to benefit from this company, Verizon. This is one of the reasons why I'm going to get rid of it, because they are just spending way too much money on paying the investors and not actually growing the company. I want to invest in companies that are growing this free cash flow. When I'm looking at this, it looks like they're raising this dividend to pay for this. They're paying from debt. They're paying from it primarily. That's what it looks like. And also they're diluting the shareholders to pay the dividend. So it's like you're recycling money. It don't make any sense. That is one of the reasons why I'm going to get out of Verizon. On the next video, stay tuned. I'm going to talk about the reason why I'm also going to sell out of my VOX shares, which is the Vanguard index fund for the communication sector. But for now, until next time, see you later. Love you all. Bye.